Okay, Assalamualaikum warahmatullahi wabarakatuh. And good morning. First of all, I have to apologize. I have to apologize for forgetting two sessions that I have actually scheduled, but I totally forgot. The first one because I had the meeting for the whole day. The second one, I totally forgot. I went to once a walk to buy laptops for my children. Please, I really apologize for that. All right. So now I'm actually heading back to my hometown to fetch my father-in-laws and mother-in-laws in Batu Pahat. But when I woke up in the morning, I said, oh, I have to do the reservation now. Otherwise, I may not be able to do so because we only be back on Tuesday. Then you're going to have your exam on 16, right? Which is on Tuesday, the day that I'm supposed to send my father-in-law to hospital for checkup. Okay, so now for your final exam, for the financial accounting part, there are only 3 topics that you have to review. All right, you don't have to do everything, just 3 topics. This is independent. So you can just do these 3 topics, which is actually the one which is the stock, all right, the stock movement. All right, I think that this one is chapter, hold on, stock is chapter 8. Right, this one is your chapter 8, and your plant and intangible asset, but we only look into the plant part, which is chapter 9. Is it chapter 9? I have to check again. Yes, chapter 9. And your cash flow, which is chapter 13. Right, 3 only. So means that in your final exam, right, which is on the 16th of June, there will only be 3 questions on financial accounting, and you have to answer all. Yeah, one question is on the stock, the other one is on plant, the other one is on cash flow. All right, so where's my, now is 10 o'clock, is it? Right, 9:50. So let's see how long. I wish I don't have to spend so much time. Yeah, so let's look into the first topic, which is stock. When talking about the stock, it's actually looking at, let me share screen on the Chrome, share, but let's see topic, not this one. Let's go into the first topic, which is the stock, yeah. This topic, okay. But I'm not going through all the PowerPoint slide, but I'm going to give you just a revision, all right, what it is under this topic, all right, but what you should know and think that you should pay more attention for the purpose of your final exam, yeah, all right. So number 1, talking about stock in your chapter 8. Okay, so remember that, all right, the stock movement, actually the objective is actually to determine, number 1 is what is your cost of goods sold. All right, you want to see how to determine your cost of goods sold. And number 2, you want to know what is your closing stock. Okay, these are the things that you must know, all right, at the end of the day. All right, you want to determine what is the cost of goods sold and what is the closing stock for a period of time. So in order for you to do this, all right, you have to look at whether you are actually using, or maybe I stop sharing. Okay, whether you are actually using a period, a perpetual or a periodic method. Yeah, is it a perpetual or is it a periodic? Because under both, all right, will give you a different way of determine COGS and your closing stock. But under both, you will get the right amount, the same amount under perpetual, the same amount under periodic, but it's just that the method to compute is different, right? So what is a perpetual? Perpetual means that you would have the every time that you receive your stock, you will record how much. So you know that how much is the balance at the beginning of the month. Then when you purchase, then you know how much you purchase at what cost. And then every time there's a purchase, you will have to record that in your system. So in most of the time, remember Perpetual is using the computer system, all right, accounting system. So there's no problem for the company to record every movement of their stock, whether they purchase their stock or when they sell their stock. Yeah. So the movement, so let's look into the Perpetual first, right? Under Perpetual, so it depends. That question will ask you, is it whether they want you the perpetual or the periodic? Okay, perpetual or periodic. Okay, so when you talk about perpetual, number one, okay, what you do is that you have the opening balance of the stock, and then there's any purchase. Right. Purchase kat sini kan? And then when there's a sales, and you have your closing here, right? So we have two, or I'm not sure purchase is here, or we have balance, and then you put, I think that is the same column, all right? So there are three columns. Balance, so means that at the beginning of the period, what is the opening balance of your stock? So normally the stock will always be in a quantity, right? For example, 1,000 units at 10.10 ringgit each. Yeah. So you have at the beginning is you have 1,000 units at 10 ringgit each. All right. So there's no sales for the period for that day. So the closing will also be 1,000 at 10 ringgit each. See? So then the following day, maybe you purchase another, for example, you buy another 200, and at now the cost is 10 ringgit each. Yeah. So when is a perpetual, right? So this is the balance on the first day. But the second day, you want to know, okay, now what is the balance on this day? Then you have to see whether then you see whether you have a FIFO, or you have an average or LIFO, for example, and then you have the average, all right? Or then you have the three method, right? FIFO, LIFO, and average. So if you use a perpetual, you say that first in, first out. All right, the first in, first out, what you do is that it means that the first stock that you have will be sold first. Okay, so let's look into the FIFO. So if you have 1,000 at 10, all right, so the balance is 1,000 at 10, and then when you purchase, then you have 200, then you still have the balance as that you still have 1,000 at 10, and the new stock is 200 at 11. Okay, then if the following day you purchase some more, then you have to rewrite wherever the balance that you have based on how much is your purchase. So you write it first in, first out. So what is first? First is the 1,000. Then only the 200 units of 11 ringgit. Okay, assuming that after that you sell 100. Okay, 100. So you put under sales. Sales is actually your COGS, cost of goods sold. Because sales is at the selling price, so it shouldn't be sales, all right? It should be cost of goods sold. Means that how much you sell your goods at cost price. Yeah, that's what I mean, cost of goods sold. All right, how much you sell the goods at cost price. But when you sell, actually you are not selling at cost, you are selling at the selling price. All right, so it makes a difference, because here you want to know the cost of your goods rather than you want to know how much is your sales. That's a difference here. Okay, so when you sell, for example, you sell 100 units, you want to know when you sell 100 units, what is the cost of these 100 units? All right, is it the 10 ringgit or 11 ringgit? Remember, you want to know the cost. So depends, go back to whether you are using FIFO or LIFO. If you're using FIFO, it means that first in, first out. So what is the first line? The first line is the 10 ringgit. All right, so it means that you're going to take out the cost is from the 1,000 units at 10 ringgit. So that's the cost that you sell. 100 ringgit at $10 or 10 ringgit per unit. All right. So that is the cost of the goods that you sold for that 100 units. All right. Because you're using FIFO, first in, first out. It means that the first stock that you have to go out. So when you make sales, you take out from the first stock. So what about the balance? The balance of the stock now, you know that, okay, 1,000 units at 10, now you only have balance of 900 at 10. All right, because why 900? 1,000 units, now you have taken out 100, sold. All right, so the balance, the 10 ringgit balance is only 900 at 10. And do you still have that 200? Yeah, you still have that 200 at 11. Okay, so if you want to determine how much is your closing stock, this is your closing stock. You take out 900 times 10 plus 200 times 11. So that would be your closing stock. This is your COGS. So if you have your COGS, if you have few items, then you take up total of these items. That would be your COGS. So in your exam, you may have several transactions. All right, so if you have 2 or 3 transactions of COGS, then you total up all here to get your cost of goods sold. All right, so here is your closing stock. So if I say that you want to take the average cost, yeah, average cost, so then what is different is that this cost would be changed. Because you want to use the average cost, the cost cannot be 10. How do you compute the average? You compute that from here, all right, 1,000 times 10 ringgit. All right, remember how to get the average? You have 1,000 times 10 ringgit plus 200 times 11. Isn't it? Divide by 1,200 units. Why 1,002? Here 1,000, here's 200. So in order to get the average cost of the goods is that you divide by 1,200 units. All right. For that you should get a certain amount. I don't have the calculator now. Where's my calculator? It's not here. Okay. So then you get, so whatever you get here would be changed here lah. All right, because this is the average cost. And for that, your balance will also be, instead of having it like this, your average cost would be something like, okay, 1,000. So you have, initially you have 1,200, you say 100, so balance is 1,100, but at the average cost that you just get just now. All right, it has to be at the same average cost. Then you start again. So every time you have a sales, then you have to recompute the average cost of the product. So in order to compute the average cost, you must know lah. The understanding is the average cost is actually the whatever the old price. All right, you put together and divide by the number of units, so you should get the average cost. Okay. So LIFO means that the other way of FIFO means that it depends on, if, for example, in this case, you're selling at 100. So rather than taking out from the 1,000, you take out from the 200. Last in, first out. So this one is the last one. So you take the last one times by 11. So the balance would be 1,000 at 10, but 200 now become 100 at 11. So that is LIFO under perpetual. You get that? All right. So what if, and then, so remember that you should have 3 columns. Okay, so the first balance and plus purchases, then you have cost of goods sold, then you have your closing stock. Okay. All right, now you also have to remember that at the end of the day, you want to know your sales minus cost of goods sold, then you get your gross profit. Okay, and the cost of goods sold is actually your opening stock plus purchases minus, so whatever you have here is what we call goods available for sales, then minus your closing stock. Right? So all this is actually what you call COGS, cost of goods sold. All right? So when you have a perpetual, right? When you have your perpetual, you just take this cost of goods sold from the second column. Your closing stock, all right? You in this case, you don't have your compute your closing stock because you can see that from the table, your closing stock from there. So under perpetual, you can determine your cost of goods sold, and you can also determine your closing stock at any time. But when talking about periodic, all right, you don't have that leisure to have your system in-house. All right, remember that periodic is used by small companies. They don't have any accounting system. All right, when they don't actually manage every stock movement. So whenever they have the stock, they just put it into their stock. Right, there's no, so they just do there's no it's not like perpetual because every time because you have the computer system. But periodic ni you're talking about small companies, all right? So they don't do the checking. They don't have enough resources to do the checking, the monitoring of each stock. So what they do is that for a periodic, all right, so you have to look at opening stock, all right, purchases, and then how you decide on the closing stock, you will do a state count. All right, a stock take count, then you know how much is your closing stock. So it means that, all right, you don't have to check whether the movement and you won't be able to know anytime your closing stock. You can only know your closing stock at the end when you do your stock take. It means that you count every item in your shop, then you decide how much is the cost of each item. Then you get your closing stock, right? So for that, all right, the method for you to compute under periodic, whether it's FIFO or average cost, would be based on this formula. Okay. Do we have an example of the, let me see if we have an example of periodic, right? So how do I go? Okay, before that, okay, so this is how you're going to do it lah. Betul lah, purchases and balance under one. So you have the date, all right, column for date, and then your balances first line, and then you have purchases, cost of goods sold, and then you have your inventory. So that will determine how much your COGS and your closing stock. Okay, first in, first out here, all right, line 4 is the, where is the physical inventory? Okay, here, I think it's here. Okay, periodic system. All right, in a periodic inventory system, inventory entries for purchases on account are as follows. So when you have, remember under periodic, you only record your purchases. All right, how much is your purchases? So you don't have cost, you don't have stock in the inventory punya account. So you only have purchases account. So what you do is that in a periodic, so you always have like this. All right, you have beginning inventory. So you have 10 units at 80 ringgit. Yeah, and then you have purchase on 1st March, you purchase 5 units at 90 per cost, $90 per unit. Second purchase, third purchase, and fourth purchase. So they only have purchases now. So whenever the company make a disposal or make sales of the goods, they don't actually record the sale. So you don't have the cost of goods sold. All right. So when you talk about periodic, you refer to this information. Actually, when you do, actually all this information is given to you. So what you do is that in order for you to determine the cost of goods sold, all right, so what you do is that you have all the information about the number of units that you have. So you see that at the end you have units in ending inventory, you have 12 units. All right, so means that from your beginning inventory plus your purchases, 10, 5, 5, 5, 5, then you have available for sale 30 units. Yeah, 30 units available for sale. But when you do stock take, at the end, you know that, okay, and when you do a stock take, you only have 12 units in the shop. But you know that you have purchased 30 units. So the missing, where did the 18 units went to? It means that those goods are sold. All right, so that's how you get the your unit sold, or in other words, your unit sold lah. Your closing stock is 12 units. All right, again, you have 30 units available for sale. How you know that is available? Because you start from your beginning inventory plus your purchases, then you get available for sale 30 units. When you do stock take, you see that I only have 12 units. It means that the remaining 18 units has been sold. Yeah, so that's how you get. So now, but you also given per unit cost and total cost. So how you decide on the cost of goods sold is like this, all right? So goes back, all right? It goes back to this formula where you have your sales minus COGS of equals to gross profit. COGS is actually your opening stock. So in this case, if I'm saying that I'm using a FIFO, first in, first out, right? My opening stock is 800. All right, looking at this, my opening stock is 800. Let me see here, yeah. Okay. Okay. And then my purchases, how much is my purchases? I will just take the total cost of purchases, 450 plus 500 plus 600 plus 650. How much is that? I don't have a calculator. Can you, 1,100, 175. Oh, I have to take my calculator. Let me, I will pause for a while, right? So that I can resume recording. So now I have my calculator. So I'm going to compute, besar tak my calculator? My husband's, all right? Okay. So it means that you have a beginning of inventory of 800. Your purchases, how much is your total purchase? Let me put here a bit higher. Your purchases is 450 plus 500 plus 600 plus 650. So your purchases is 2,200. 2,200. Okay. And then from here, you should get your goods available for sale is 3,000. Right? 3,000. Your closing stock, all right? So your closing stock, you know that 12 units. Okay, so now it comes to the, okay. You know that your closing stock is 12 units. Then you have to decide what is your, you have 12 units of closing stock. Then you have to decide, are you using FIFO or LIFO? Okay, FIFO or LIFO. I think that I have to write here so that you can see. Okay. Let's see again, yeah. You punya 10 at 80, 5 at 90, 5 at 100, 5 at 120, and you have 5 at 130. 10, you have 10, 10, 30 units. Okay, so total available is 30 units. So when you want to see how much is your closing stock, right? Your closing stock, if you're using FIFO, okay. Okay, this one is the, it's a bit reverse, yeah? When you're using FIFO, your closing stock will be the top one or the lower one. Because we're talking about closing stock, means that under FIFO, you will sell the upper one, then your closing stock is the lower ones. It means that these are the newer ones, the old ones you have sold first, so your closing stock would be the lower ones, yeah? So if you want to have your closing stock to be 12 units, you will take from 5 units from 130, because you want to have the closing stock under FIFO. 5 units from 130, and the 5 units for 120, dah ada berapa? 10 units, right? So you only need 2 units from the 100. So that will be your closing stock lah. So how much is your closing stock? Sini 5, 130, 650, and here is 600. But here you only have 2 units, so 200 lah. 2 units times by 100. So what is this? This is your closing stock under FIFO. Yeah, so what is your closing stock? 200 plus 600 plus 650. Then you get 1450 as your closing stock. So remember that this formula is still the same. All right, so you have goods available for sale is 3,000 and your closing stock 12 units under FIFO would be 1450. Okay, so here means that now you have 3,000. Then you see that the balance here is your, whatever you have here actually is your cost of goods sold. Yeah, this is your cost of goods sold. So this, remember, this is the periodic under FIFO. You get that? Periodic under FIFO. What if I say that is under LIFO? Right? If it's under LIFO, your closing stock still 12 units. But what is your closing stock? Closing last in, first out. It means that this one will no longer be there. So your closing stock will be from the top ones. All right. So from the top ones, it means that you will have your closing stock instead of this. This one is, remember, this one is the FIFO method. First in, first out. Your closing stock is the one at the bottom. All right, because the upper one, the old stock has been sold first. First in, first out. So you are left with the newer stock as your closing. But if you're using LIFO, last in, first out, then what you do is that last in, first out will be last in. So this one will be sold first. You're going to have the remaining, the old stock, all right, in your account. So in order to do that, all right, you have to take the 12 units, then you have to decide. 12 units must come from 10 units at 80 and 2 units at 90. So you will have 800 here and 2 units at 90, you have 180. So the 980. What is the 980? Closing stock. Right? Closing stock 980. So here you have to be 980 as well. Then you get your COGS figure. Okay. That is under periodic LIFO. What if you have a weighted average under periodic? Right? So what you have to do is that you just get total cost of all these. Where do you get that? Remember, you go to the slide, you see that the 3,000. So that is your total cost of your goods. So you have 3,000. How many units that you have? 3,000 in for how many units? 30 units, right? So 3,000 over 30 units. So it means that each unit average cost is 100. So it's very easy under periodic using average cost. Total cost divided by the number of units that you have, then you get cost per unit. So when you have closing stock 12 units, so you just take 12 units times by 100 ringgit. All right, so that's it for weighted average. Okay, so that's how you do it. Okay, so we have covered your perpetual and we also have covered your periodic, whether it's under FIFO, LIFO, or average cost. Right? So what I want you to do, of course, in your final exam, I have both questions. One is on periodic, whether is it under FIFO, LIFO, or average cost. The other one is on a periodic using FIFO, LIFO, or average cost. You should be able to determine the cost of goods sold and the closing stock. All right, so that covers for your chapter 8. That's all. Right, don't worry so much. So you just get some exercises on this topic. So you should be able to do both perpetual and periodic, either under FIFO, LIFO, or average cost. Okay. Now let's go to chapter 9. Hold on, yeah. We are going to chapter 9. Okay. All right, for chapter 9, all right, so chapter 9 is on plan. Yeah. So in this chapter, what you have to do is that you must know how to determine the cost of when you acquire the asset, how much is the cost, right? So that is your acquisition. Upon acquisition, you have to determine how much is the cost of the asset, and then you have to allocate the cost over a certain period of time. So that is what we call depreciation. Yeah, depreciation. So means that how you decide, it depends. For example, it says that okay, the asset the useful life of the asset is for 10 years. So you're going to divide the cost of the asset over 10 years, then you get the depreciation for every year. So assuming that the cost is 100 and then useful life is 10 years. So 100 over 10 years means that 10 per year. So your depreciation for of every year is 10, 10, 10, 10. So it means that after 10 years, the value of the asset will be 0. Yeah. And then you also have to know whenever there's a disposal or sale of the asset, so how are you going to compute, is there a gain or loss on the disposal? Yeah. So what you do is that you have to understand that when you acquire, number one, when you acquire, what will be your cost? All right. Number two, how to compute your depreciation. Then you want to know how much is your gain or loss upon disposal. Yeah, gain or loss upon disposal. So depreciation, as I mentioned, that okay, let's say that the cost is 100,000. Depreciation is useful life is 10. So you're going to divide 100 over 10. So you get 10,000 per year. And then when there's the disposal, then you have to check how much is the cost minus accumulated depreciation. Accumulated depreciation is your depreciation that you have given throughout the year. So for example, if 10 years, if it's a 10,000 per year, assuming that you have claimed depreciation for 4 years, so your accumulated depreciation is 10 plus 10 plus 10 plus 10. So your accumulated depreciation is 40. Cost is still 100, so means that 100 minus 40 means that the book value of the asset is 60, right? The book value of the asset is 60. Why you need to know the book value of the asset? Because when you sell or when you dispose the asset, you must know what is your disposal value. All right. So assuming that you can sell the asset for 80 ringgit or 80,000, right? Make it 80,000 lah, sedap sikit. All right. So you know that your book value is 60, but you can sell at 80. Isn't it good? Because the value of the asset is only 60,000, but you can sell the asset for 80,000. So are you making a gain or loss? The different 20,000 in this case is a gain on your disposal. So that's actually how you compute your gain on disposal. All right, but if you say that, all right, the book value is 60, but you can only sell that for 50, then you know that, okay, I can only sell that for 50, even though the value is 60, I'm making a loss of 10,000. That would be loss on your disposal. Right, again, your cost minus accumulated depreciation, you get your book value, compare that with your disposal value, you should get whether there's a gain or loss on your disposal. All right, don't worry about the debit, credit, everything, but you must understand the concept of this topic. All right, cost 100, depreciation, and then how to give the depreciation, and then you have gain or loss on the disposal. Then you have determine whether compute accumulated depreciation here. All right. So normally information is provided to you. You just have to plug in the information. If you have understand the concept, then you should be able to determine the gain or loss on the disposal. Right. I think that is for this chapter. Chapter 9. One page only, summary. Yeah. So how to decide on the cost, on the depreciation. Then from here, how to compute a gain or loss on the disposal. Okay. Now we move on to chapter 13, which is the cash flow. Right? Unfortunately, I do not know. Unfortunately, I don't have the slides for cash flow. Right? Cash flow. Right? So the cash flow, chapter 13, all right, you only want to look at the indirect method. Okay, so when you talk about indirect method, you must be clear about which one is your current asset, which one is your current liabilities. Okay, because you want to know the movement, right? Movement of your asset or your liabilities, whether there's an increase in your current asset or there is a decrease in your current asset. If there is an increase or decrease in your current liabilities. And for that, you must know lah, if given an asset, for example, given an account receivable, then you know it's a current asset. All right, for example, your account receivable, your cash, your inventories, all these are your current asset. But I talk about the payables, all right, your accounts payable, notes payable, all this is your current liabilities, all right? So how to know the movement, all right, you have to look at, okay, beginning, how much is the beginning, how much is the ending, right? So if the beginning you have 100, ending you have 120, that means that there's an increase of 120. Okay, so if there is an increase, so what would be your adjustment, all right? So in this case, you have to decide increase or that account. Number one is that you must know, number one, account, is it current asset or current liabilities? Stop sharing. Okay. Number one, you must know whether the account, is it a current asset or a current liabilities. So for example, if you have your current asset, for example, is your accounts receivable, your cash, your inventory. So all this is your current asset. But current liabilities, for example, your accounts payable, any payable, wages payable, any payables account is your current liabilities. Number one. Number two, look at the movement during the year. So the movement means that you want to see opening, how much the opening balance, how much the closing balance. So you see like opening balance, or sometimes they give you year 2018 and year 2019. So you know that the 2018 is your opening balance or the beginning balance, 2019 is your closing balance, right? Then you see, then you compare the beginning and closing, is there an increase or decrease in the accounts? Yeah. If there is an increase, then you indicate there's a current asset increase, or current liability, there's a decrease. So when you know whether it's increase or decrease, then you go back to the first. Remember, I give you the summary, right? That's something like this. I think that you have your current asset and current liabilities increase or decrease like that. Ada tak yang macam ni? Something like this lah. Right? Then you have to decide whether if there is an increase in current asset, maybe you have to minus. But if there is a decrease, you have to plus. Current liabilities, if there is an increase, you are going to plus. If there is a decrease, you're going to minus. Something like that. Maybe the other way around. But you look back into this table. Alright? If you have problem, you let me know. I will look, because I cannot find this chapter punya slides. But I remember that in that slide, there's a one formula for this. Yeah. So means that again, you have to decide for each account whether there's an increase or decrease. If there's an increase, all right, maybe you might minus. All right. So bila you buat exam, normally in the first time that you go into your exam, if you want to write down this formula, you write down immediately so that you don't forget where you do the question, because this is the third question in your final account, in the financial accounting. The first one is on your stock, the second one is on your asset, the third one is on cash flow. So maybe you want to write down immediately, write this formula. But check again whether this plus minus ni betul ke tak, because I think it's the way. But please double check. So what happened is that for every item that you have identified, increase or decrease, then you see lah. If minus, you buat bracket macam tu lah. Alright, kalau plus, you just add back lah. So total for the period, then you get the cost of operating. This one you want to determine the operating expenses. Operating activities, not expense, yeah, from your cash flow. So that is for your third question. All right, you decide how much is your net operating activities. All right, the movement of your current asset and current liabilities. But of course, that is your current asset and current liabilities. You also have the other one, what we call the, okay, this is one. Ada lagi satu lagi, lupa nak mention. Alright, your non-cash item. Your non-cash item. For example, your expenses is your depreciation. Right, depreciation you have to add back. Kalau ada loss on disposal, you have to add back. So depreciation and loss is an expense. Bila expense, you nampak benda tu expense, non-cash item, ya, depreciation, selalunya depreciation je lah. Dengan loss on your disposal is an expense. Bila expense, you add back. Why you add back? You have minus, but because you're talking about cash flow, alright. For depreciation, you don't pay for your depreciation. But your profit, alright, you start with your profit, right? Profit, whatever amount here, in arriving to this profit, you have minus, or you have deducted your depreciation, you have deducted your loss on your disposal. But these two items is a non-cash item. It means that you don't pay for your depreciation, you don't pay for your loss on your disposal. It's just a concept. But you deducted that, but this amount does not involve cash because you did not pay for these expenses. So that's why you have to add back, all right, in order to take out the non-cash item from your cash flow statements. All right, you want to take into account your non-cash item from your cash flow statement. All right, but if you have an income which is non-cash, for example, you have gain on disposal. Gain on disposal of your fixed asset. Gain, in order, remember, in arriving to your profit, you have added your gain. Gain is an income. So you add your income in order to derive to your profit. But because you want to take out the non-cash item, you have to minus. Because why? Now you plus kan? Initially you add. So now you want to write it off, you minus lah. Right? So then you take into account your current asset, current liability movement just now, whether you plus or minus, then you get your operating activities. Yeah, so that is for your cash flow. Okay, what else? Hold on, yeah. Okay, so I have covered 3 topics within 1 hour. Yeah, not even 1 hour. I have covered your stock, I have covered your plan, and I have covered your indirect method for your cash flow. So these are the 3 types of questions in your final exam. I hope that you'll be able to answer. I just browsed the final exam question just now. I think that I have covered everything. Yeah. So what you have to do now, look for some exercises on this topic. All right, do a bit of it, and then I think that you should be okay in your final exam for the financial accounting portion. All right. So you have until Tuesday, right? Your exam is on Tuesday. So I'm going back to my kampung today, to Batu Pahat today and tomorrow. All right. But if you have any question, you can always WhatsApp me. All right. I have actually put that in your Google Classroom as well. I will share this video in the Google Classroom so that you can refer to this video soon. Yeah. I hope that this is would help you, all right, to revise on your financial accounting portion of your final exam. So with that, I thank you again for your listening to this video. I thank you for everything. Yeah. With that, Assalamualaikum warahmatullahi wabarakatuh. And goodbye.